Having cash in the bank used to get you a return of 3 or 4%. These days, interest rates on cash are flat or sometimes negative. Even bank deposits and 5-year gilts make you less than 1%, and interest rates are expected to remain low for a long time. So, to get a return, investors must look to invest elsewhere. You could invest in the stock market, but market volatility means uncertain returns. So in this low interest rate environment, how do you maximize returns on your savings whilst investing in line with your risk appetite? Our range of multi-asset products cater for a variety of investor types who are willing to take a level of risk in order to make a return. We look at property, alternatives, currency, infrastructure, derivatives. The whole time we are mindful to changes in performance, as asset classes can behave strongly or struggle at different times. Take equities. They should give the best returns over the long term, but they're volatile. Japanese equities are currently 55% below their 1989 value, whereas US equities have returned 900% since then, so it matters which region you choose. If you invested in US and UK equities in 2000, it would have been 2013 when you broke even. When it comes to bonds, we know they've seen 3 decades of good performance, but they were a bad investment in the 70s. Will the success story continue? Well, right now there's $4.6 trillion worth of bonds with a negative redemption yield. This is why our team currently prefers equities and is looking at other ways to enhance yield in a low interest rate environment. Within commodities, we know the oil price has yo-yoed from 40 to 190 back to $57 per barrel from 2004 to 2014. And gold might seem safe, but it's lost 24% in the 3 years from the end of 2011. And finally, cash. Well, money in the bank will erode by 2% a year if central banks hit their inflation target. So what does multi-asset offer? As you can see, different markets perform well at different times. So a multi-asset fund allows our fund managers the flexibility to go where they see the best returns. By holding a diversified blend of assets, you can often reduce the risk that comes from putting all of your money into one specific investment. This smooths out the ups and downs, so returns are more consistent and less extreme. You can avoid the large swings that can come from investing in the stock market and ride out the tough times. At Ashburton Investments, we have a multi-dimensional and dynamic approach to investing. We aim to maximize value in today's low-yielding environment. We've been successfully multi-asset investing for 30 years, having adopted an active, diversified approach within a risk-managed framework. We have an experienced team of dedicated multi-asset and macro specialists who drive our decisions, who can pull in expertise from across the Ashburton network.